Contributor Tom Lee, the head of research over at Fundstrat Global Advisors. The chip trade, we've been calling it the epicenter, the tail wagging the dog of the markets, so to speak, for quite some time. But we did see a nice little run up in the midday session for many of these volatile memory stock names. How exactly do investors and traders reconcile the volatility versus what we could see in terms of long-term price appreciation for these particular types of stocks?
Yeah, Tom, I know it's been a very volatile week. If people have been long those names the last couple of weeks, it's been a rough ride. But these companies are at the center of one of the most important strategic initiatives for the U.S., which is AI and AI infrastructure. And that runway has years ahead, and they're going to report next week. So I think that this pullback's healthy. Leveraged funds definitely create more volatility. It is always creating an opportunity for the long-term investor, because if someone missed the DRAM trade or the semi trade and now they can buy it, or even Korea, and they can buy it 20% cheaper, that's the entry point. But yeah, it's very difficult. I mean, my institutional clients, many of them are having very difficult years because shifts in the themes or the winds or even visibility cause instant reaction, and it's something people aren't accustomed to.
Is leverage a factor in your mind? Forget about the world of leveraged ETFs, which is a different conversation that we can have in addition to what's going on right now. But from a margin debt standpoint, from a people understanding whether or not they should be long short-term something or short-term something with push-button liquidity, as you point out, is that something that we should be fearful of? Has it reached a point where we could see further market structure deterioration, the likes of which we have not seen up to this point?
100%. Margin debt today is now up 54% year over year, which is the sixth highest rise in like 60 years when you look at monthly data. And the other 5 times, similarly, the market consolidated over the next 6 months 5 of the 6 times. Because when that cohort of traders is tapped out, they borrowed money, the market is vulnerable to a drawdown, which is what happened in Korea, right? In Korea, I believe the data is 1.2 million brokerage accounts had a margin call, and that may be as much as 10% of actual adult brokerage accounts. I mean, some massive correction followed. So could that happen in the U.S.? Yeah.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Finding of the peace trade, but today maybe some stability here.
Good morning. Yeah, I think investors are naturally going to be unsettled because the U.S. is having a conflict with an enemy that, of course, is trying to engulf more nations and is threatening other countries. But we also know that during that period in February through April, while the war was escalating and markets were tumbling, it ultimately proved to be a good buying opportunity for stocks. And I think, for me, maybe that would be the bigger message for viewers, that you may not really want the U.S. to be at war, and it may actually make you very nervous about what you hold. But it proved to be a time when actually the U.S. economy actually not only did well, war was probably somewhat good for the economy, and ultimately it created a V-shaped bounce.
Yeah, I mean, it's such a good point, Tony, especially when you look at you even see it in the macroeconomic data. It's not just AI infrastructure build out that is buoying the U.S. economy right now. It's huge amounts of defense spending that's making its way out into this reindustrialization push right now, too. And yet, the defense contractor stocks, at least the so-called legacy primes, they're all lower. Right. The stocks are lower since the start of this war.
It's counterintuitive, and I think it's the peak defense trade, and people are saying, hey, midterms are coming up. There's going to be if the House is split and there's not a majority, it's going to be difficult to get defense spending passed. But the reality is defense spending in general is bipartisan. There will be some brinksmanship either way, no matter what, likely. But all things being equal, we're still well below historic defense spending on a GDP basis, on a federal budget basis. And I don't think Europe is thinking they're going to peak defense. I don't think allied countries in Asia think there's peak defense. I don't think the Middle East thinks there's peak defense. So I think the reality is probably not the case.
Yeah, I mean, the other news that came out of the NATO summit yesterday, also very significant here, Tony, was that the U.S. is giving Ukraine the green light to manufacture Patriots.
Yes.
And also, it would seem that the president of the United States is okaying, these strikes into Russia, as well as Ukraine seems to be winning the war here. What does that mean in terms of the international picture for companies like RTX, like Lockheed Martin, and also some of the newer players? We've had a lot of drone companies have gone public, even just in the last couple months.
Right. As regards to the Patriot, there has been a precedent before. We allow Japan to produce Patriot missile, and we allow other countries to produce other weapon systems that we have. It's a complex weapon system. The supply chain is huge. It's going to take time if Ukraine were to start building these today. It's just going to take a material amount of time to get all of the suppliers together. You can't 3D print your way out of mass production. There's so many components in the radar seeker heads, and then you need all the support system for all the host radars and all the other components that go into the communication of the system. So it's going to take time, and it's going to benefit. It will benefit the suppliers. I mean, Raytheon makes a lot of the parts, obviously, for their own missiles. So does Lockheed, and Europe is likely going to pay. Essentially going to give a loan to Ukraine to pay for these weapon systems.
Yeah, we talk about memory shortages within tech, but it's something else that also affects systems like Patriot as well.
Yes.
Which, Tom, brings me back to what we have seen we talk about rotation in the market more broadly, and certainly that's happening. I do want to get your thoughts on small caps, for example, which have outperformed, and you were so early to that call. But even just the rotation we're seeing under the hood in tech, are there buying opportunities here?
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.